You've seen the U.S. future rise. Brent hit $110 a barrel. The U.S. 10-year Treasury yield fall very sharply. Bond yields have been falling sharply in Europe as well. Later this week, of course, the Fed chairperson will be, testifying before the Congress as far as inflation goes. So much to track, so much volatility as well. But U.S. President's address, is that likely to calm the markets?
Well, I don't know whether it'll naturally calm the markets. It was fortuitous in its timing, and the markets are in turmoil if you're looking at energy and what we've experienced in the last couple of weeks. So it may quell the markets a little, but I'm not suggesting that it's going to take the volatility out of it. And I think that we're going to see incredible whipsawing over the next matter of, 72 to maybe 3 to 4 days or 5 days of trading. So these are very unusual times, and when you see the market up, what we saw in the last 24 hours, it's just, very, very hard to comprehend.
Bas? Vandana Hari, just when you thought 100 was bad, it's 110 now. Where do you see crude headed next?
Good morning. It is 110. We are going to be okay, we heard Biden say just now. Are we? I don't think the markets agree with him. Look, crude is spiraling up almost in lockstep with an intensifying fighting on the ground in Ukraine. So the latest headlines on Ukraine are that Russia has stepped up the bombardment of the biggest cities. And Biden is coming under growing pressure to now ban Russian energy exports. I mean, that's probably the last remaining tool that they have, one that they have very meticulously tried to avoid using. But, just as Putin is being pushed to a corner, the NATO allies are also have their backs against a wall. That's the worry crude is pricing in right now.
Sure is. Having said that, just looking at the correlation, and the Nifty was already negative for the last 3 months of the crude rally in excess of about 20%. Peter, if I could just come back to you, we have seen a fair amount of correction in equity markets at large, and it almost seems like a synchronized move, especially ever since, the Ukraine-Russia issue really came to the fore. But do you believe that this could really call a top for the bull market, which global equity markets have seen ever since April of 2 years back?
Well, 24 months into a bull market which has been unheralded, and it's just incredible what we've seen as far as equity market growth. And over the last, as you mentioned, probably 6 weeks or 8 weeks, we've seen a steady pullback. Is there further to go? We understand a couple of key points. Are we going to see 7 rate rises this year from the Fed? We've got energy prices only 2 months ago were at 70 and now we're at 110. So that's 60% move to the upside. We've got inflation pretty much out of control. We've got base metal prices and food prices incredibly high, what we're experiencing in Australia anyway and across the globe. So I wouldn't be surprised to see a little bit of a handbrake on equity markets. They may give back a little bit further of these gains. There is a lot of uncertainty out there. 22, everyone said it's going to be a volatile year. Well, it's come out of the blocks kicking 2 months in, and it's been electric so far. So as far as traders are concerned, been one of the best starts of any year 2 months in. Certainly because trading both long and short is giving traders an incredible opportunity to participate.